Hello and welcome to an episode of Monday Markets. As always, we are brought to you by Woo. The elephant in the room with Woo is that Kronos, the primary market maker on Woo, was hacked, and as a result, the exchange had to disable trading and withdrawals as they were dealing with their custody accounts and locking accounts on other exchanges to try to contain the incident and so on and so forth. I don't want to speak too much out of turn without the full post-mortem of what happened and the steps moving forward being made publicly available. I think that's coming in the next week or so. And again, conservatively, I think the most reasonable thing to do prior to the post-mortem is just to withdraw your money and then wait and see what the team comes out with. And if you want to redeposit it or redeposit some amount or just fuck off forever, I think that should be done with the post-mortem available and after whatever level of scrutiny you feel is appropriate from a counterparty risk point of view. Again, yes, they do support the show, but we put our audience first and foremost before any sponsorship or any of that nature, just in terms of managing capital, counterparty risk. As far as I know, the withdrawals are sort of going through seamlessly and they are 100% on top of that queue. So I think conservatively, just pulling your money out and waiting to see the breakdown and then reassessing whether that is a venue where you want to hold some risk is a pretty conservative but also very reasonable thing to do. I still have my trading stack on there. If that goes to shit, which I don't expect it to, I don't have any information suggesting it would, but if it does, that's sort of my frame of mind for every trading account I have on any exchange, so be it. So yeah, just wanted to get that out of the way, and maybe we'll have more or less to say when the official communication stuff goes out. But, you know, trading is back there, although in some altcoin pairs it's still thinner than usual. And withdrawals are fully processed as far as I'm aware. So make decisions that make sense to you. I've outlined what the most conservative one is and don't feel the need to incur any amount of counterparty risk just based on, you know, someone's Twitter account or what you read or what YouTube channels you're subscribed to. So with that out of the way, let's talk about the market. The monthly close is looming. We have 10 days left. They've started pushing it up into the monthly close, which would be positive. I still think 35K is the monthly level. If it closes around here, it's very easy to start getting into finding new levels essentially. So for example, if we were to close below 38K, one could say, well, yeah, we closed above 35K, but what about 38K? Isn't that resistance? What about the other side of that at 45, which is also the range midpoint? You know, you start sort of imposing levels on the market that you didn't care about initially. I think for simplicity's sake, and because the monthly works fairly, in a very straightforward fashion most of the time, I still think 35K is the better monthly close level, and all of this stuff, high 30s, mid 40s is better assessed on the weekly time frame, and the sort of important close is at 35K. So we'll see where that goes. It's good so far. Again, bearish closes would be below the level, so below 35K, which would also necessitate a close below previous month's high. All of that would start to look pretty rough. It doesn't need to be an ugly rejection candle to look rough. I think just closing below the level after wicking into it would be bad enough, but we have 10 days and it's looking positive so far, but it's been really back and forth this month, certainly a bit more, give and take compared to last month. So that's the monthly, and the same monthly range I still think is still intact, between 35, 46 midpoint, 58 high. So there we go. The weekly time frame has just been green only for the time being. 1, 2, 3, 4, 5 consecutive green weeks. We're going to have a red week eventually. I'm not sure exactly when or where that would happen. It could just push higher and then you get your larger dip into basically where we are now. It could happen from here into weekly support. I have no idea. I have no insight into this thing. I think there is some sort of momentum and candlestick evidence that the thing is slowing down a tiny bit, but nothing decisive yet. And as we'll discuss on the weekly and daily timeframes, there's nothing too scary for the time being. So as far as the weekly goes, as before, it's the same argument that we made weeks and weeks ago. The market hasn't really moved in the last 3 weeks or so, or 2 weeks to be precise. 32K breakout is the important level. All of this stuff at sort of 38, 39 is best suited for lower time frames, maybe the daily or 2-day or whatever else. But on the weekly, it's 32K that's important. The other side of that, as you know, is 58, 59, and we get the same confluent mid-zone at 44, 46, depending on whether you're looking at it on the monthly, weekly, daily, and what have you. That's really it for the weekly. Again, even if there are shallow pullbacks as part of a weekly correction, I think those areas are better suited for daily timeframe viewing rather than weekly. So that's what we're going to do. That said, also, if the market's going to be bearish, I still think the clearest swing, sort of high time frame, high big signal, if you will, invalidation is below 32K, this would start to look like a failed reclaim deviation thing, and back below 32K, I think the range low at 24, 26 isn't implausible, which is an influencer way of saying likely. The daily time frame is the time frame I tweeted out earlier today, or perhaps it was the 2-day time frame. I don't recall exactly. I mean, let's take a look. This looks right. So as we're pushing into the high 30s, some of the higher timeframes are less useful than before. So if we think about it contextually in terms of where we are right now, the big weekly level is around here at 32s. We know we're in an area of monthly resistance, but the other high time frame levels in terms of what's above us, those weekly midpoints and what have you, they're closer towards 44, 46 on the monthly time frame. So we have a bit of a gap between high time frame invalidation at 30 to 32, let's say, and high time frame range midpoint at 44, 46. There's quite a bit of space between those two areas. So I think the 2-day or daily or 3-day, the half week type timeframes are probably most helpful for intra-week trading. And to that effect, the chart I posted on Twitter has a few good levels, or I think, decent areas to contextualize where we are right now if you're looking for something. So the range I have on this time frame is between 37.5-ish, so basically where the market is right now, and 44K. I think it's a fairly uncontroversial range from a technical perspective, right? So if we're looking essentially at this large pre-bear market breakdown consolidation, and we've taken the initial lowest close set, which is a fairly self-evident floor, and then the highs set with a bit of a deviation as well. But if anything, that makes me more confident in the level itself, and we get a midpoint conveniently at around 40K, that nice little round number area. So with that in mind, I think this, whether it's the 2-day, 3-day, or daily, basically the sub-weekly timeframes are probably going to be best for navigating what's left of the market into the monthly close. The only other level that I would add, should the market offer a more substantial pullback, is this little pocket or cluster range low at 34, 35K, 34 to 35K. I think that's reasonable. I think that would be an appropriate type of shallow pullback that would look scary, but structurally wouldn't look all too terrible. Anything else that, for example, breaks 33, 34, we then start getting into sort of peak proximity to invalidation. Oh my God, was the whole thing a fake out type levels at 30, 32? So if we're looking for something that won't give us a heart attack in the form of a pullback and is technically acceptable, but still, more like a bigger pullback than we've had basically the entire run up, then that level makes sense to me. Because if we really contextualize this move, we really haven't had that many pullbacks if you're a pullback oriented trader. Ever since the momentum really picked up, we had a couple of red days here that ultimately didn't even break the lows of the preceding bar and just continued higher. And then we had this pullback here on the daily time frame. And all that pullback managed to achieve was a retest of the daily support, which you may recall we discussed on last Monday markets at this highest close. The argument at the time was that this close would be an inside day failure. So any move lower, the earliest support is at 35.4 and the lowest was, I think, 33.9. Correct me if I'm wrong, but I believe that was the argument made in Monday markets last time. And in fact, we got probably one of the more bullish resolutions to that type of inside day failure pullback, which is the market closing above the earliest level of support, and then the next day was very strong. So that's kind of what my personal short to medium term trading roadmap looks like. Yeah, those are the levels. In terms of expectations and stuff, I think the most pertinent thing at the moment with this sort of hourly 4-hour mess that we're in is that we had a headline today about DOJ, Binance, and discussing a potential sort of $4 billion fine to wrap up the investigation, and the market's just trying to digest that at the moment. So on its face, it's not the worst thing in the world because the air of uncertainty surrounding Binance, I think, was far worse than just I say just a, I mean, it's still a big fine, but I think for CZ and for Binance, especially as a business, $4 billion isn't sort of the end of the world, and the market at certain points was pricing much worse, and there were solvency concerns and mass withdrawals. So relative to how, the seriousness of the overhang and what the expectations for Binance were at their worst, if they manage to come out with a $4 billion fine and, if CZ avoids sort of personal charges, which are a lot worse than that, then I think that sort of lifts at least we've avoided the worst case scenarios, and we've also avoided the uncertainty of the whole thing. And for markets, which tend to be forward-looking, I think that will be neutral to good news compared to some of the more apocalyptic worst case scenarios. So that's what we're sort of trading and ruminating on at the moment. Is it priced in? How bad is it? If it's just a fine, but then CZ has to step down, is that bullish or bearish? That's sort of the price action that we're seeing at the moment. But it also, just from a technical point of view, we are at the sort of relative range high on the 3-day and the daily as well. So a bit tricky there. I think if we take a slightly zoomed out perspective in terms of where is there space on this time frame, I think a solid range, the only two things I'm interested in, one more than the other. I'll start with the slightly less interesting one, which is that if we just blast through this hourly, 4-hour sort of grindy consolidation and accelerate, I think there's decent enough space between the former range low at 37 and the next midpoint at around 40 to 41. There's 8-9% there on BTC should the market go there. And in general, range midpoints aren't sort of mega reversal levels. It's the extremities that are more interesting. If it manages to go all the way to the range high, that's an extra 18%. So continuation trade through 37K-ish would be nice if it sets up. It might be a bit tricky coming into the monthly close, but in general, just purely in terms of structure, that's interesting to me. And the other one that's interesting to me is if the market offers a more sizable pullback, like spike, fail to break out, and then a meaningful sort of dump. That doesn't seem hugely likely in my head, but it's, it could happen. It doesn't really matter how the market gets there, but it would be nice to get a sort of fresh test of this daily and 2-day, medium time frame cluster at 33 to, 34 to 35K. I think that'd be interesting for a trade. This was a nice pullback, but it was on the shallow side for sure. I mean, it had the daily level for it, but just kind of one tap and go. I mean, maybe that's just the nature of the aggressive trend, but something a bit more sustained and scary with a bit more consolidation before resuming the trend, I think would also be welcome. And that area for me is sort of 34 to 35. Anything below that, I think, would probably require its own videos. For example, if we were just to mega moon and break out of 44K, that would probably require its own separate video. Similarly, if we were to break below 34 to 35 and just nuke this uptrending consolidation structure and start to approach weekly invalidation, that would, require its own piece of content. But for the time being, it's more or less quite orderly. And I think it's captured well by the levels that we have here. So let me know if that makes any sense, and hope some part of that was helpful. On the ETH BTC front, ETH BTC still looks weak. No weekly reversal to write home about for the time being. Still below 0.57, and this is just kind of consolidation for the time being. The daily structure is arguably better than before, but given how long and strong the dominant trend to the downside has been, I think there should be tempered expectations with short-term outperformance or pops in market structure, especially if weekly levels continue to be respected on the underside. So I think, again, given how long this thing's been going on for and, very one-sided kind of from a trend and market structure point of view, it's not asking for a lot for the weekly time frame to print some sort of local reversal, and it hasn't done so yet, so no huge rush there. ETHUSD is quite interesting. On a weekly closing basis, you'll recall this 1935 level. It actually held on the retest, which is nice. We're now in this agonizing range, which really shouldn't be a range, but ETH just has been so weak that any sliver of resistance has been doing its job. This sort of highest close at 2.1, 2.2K. Now, typically, these sort of deviation highs don't make for particularly compelling resistance levels, but this thing has been so reluctant and, allergic to upside that even weak levels are providing disproportionately strong reactions. So as depressing as this may sound, I think this is the range on ETH. 1.9 as the weekly breakout and a decent area for invalidation, especially given we've spiked it once. If it starts getting accepted below there, I mean, that would just look really weak. And the local breakout level is 2.1K. So look, if this weekly signal has any strength whatsoever, I mean, you've closed above 1935 now, you've retested it. If that's not good enough for this thing to push up, catch up a little bit on the ETH BTC and maybe fill in some of this one-sided selling through 2000s, then, I mean, God save us all, right? That's what more do you need at that point? But aside from 1.9 and 2.1, 2.2, I think that captures the important bits of price action. I haven't got anything else that's more compelling than that. I've got a few altcoins here. Not because I have a particularly strong thesis on altcoins at the moment, but the market being at potential sort of inflection points based on the monthly close and the range levels that we discussed on ETH and BTC. I just wanted to point out some altcoins which have big levels in one way or another. So if they break out and the rest of the market looks positive, I think they'd be better set up for continuation. If we get stuffed into the monthly close and these breakouts fail, I think similarly these pivots can be adjusted. This sounds like an awfully convenient, if it goes up, buy it, if it goes down, sell it. I completely understand that charge, but I'm approaching it from a much more, I guess, intellectually humble position, saying I don't know what's going to happen, but if something clear does happen, these are the levels around which I'd prefer to do business rather than chasing alts in the middle of nowhere. For ADA, it's the sort of 40-cent level, this former weekly range high. We've sort of deviated once and we're back at resistance here. You could extend it a little bit if you wanted to this pre-breakdown range as well, but it lands you in the same area, sort of 40 to 43 cents. That's a pretty big inflection point, and that's really all there is to say. It's resistance at the moment. It's had a very strong month into this level. Maybe it's setting up for a short-term trade of some nature, but again, the reason I'm sort of bringing up these altcoins is on the assumption that we get some sort of, swing-ish move, 2 to 4 weeks of trend, if you will, on BTC and ETH. And for that reason, I'm trying to find altcoin levels through which, it wouldn't be terribly surprising to see the reversal or continuation. And for ADA, 40 cents, it'd be really bearish if it overshoots or just rejects and sort of floats back to fill in just 4 weeks of upside. On the other hand, a big breakout through 40 cents, there really isn't a ton of resistance until you start looking at sort of 56 potentially, and maybe even gap fill areas at 80 cents. So in terms of whether it's for short-term trading or looking for future swings, depending on the read you get on BTC and ETH, 40 to 42 cents Cardano is one of those standout levels that makes sense from a strictly technical perspective. There's a similar one on AVAX, around, this one's slightly less clear, but I'd say it's around $20, $21, just trying to capture these sort of recent market structure highs. This one isn't that great, but just because it makes sense here, and then these two swings in particular. We had a strong weekly close above them, and the market's pulling back at the moment. So similar argument, if altcoins start to take the shape of either approaching range highs and failing, or breaking range highs and retesting them immediately and failing, I think they would look pretty weak across the board. And this is just another one where the levels sort of speak for themselves. And again, contextually, we've had 3, 4, in some cases more weeks of upside, and we're now reaching weekly inflection points. So even just very conservatively, it's a decent spot to take a chunk of profit and reassess post-monthly close or post-weekly close, whatever. But if you are just looking for short to medium-term trades around decent levels, I think this is one of them. And again, this sort of segment makes a bit more sense if you consider some of the other weeks we've had. This is several months of price action, and what kind of levels are you looking at here, right? Same within the last sort of 3 weeks as the market's rallying. You don't really have a ton of great technical levels that stand out on the chart if you're high time frame oriented, whereas now some altcoins, given their recent performance, have landed at those areas. So I just thought it'd be a useful exercise to highlight, regardless of whether it's for a future swing or just a day trade, to be honest. SNX is another one. Again, weekly breakout attempt at $3. Yeah, that's a big level. I don't have a whole lot to add on that front. We could go through the whole exercise of if it breaks and holds above, it's going to go higher. If it breaks and then falls below, it's going to go lower. If it goes sideways and then breaks that local range low and reclaims it, that's bullish, that's your invalidation, all that kind of stuff. But I feel at this point, you've probably watched so many technical roundup videos that you sort of know the basic premise of how to do business around a level, what to look for, what not to look for. And if that doesn't make any sense to you, I've got videos on the Cred channel, top-down trading, entry techniques, entry triggers, all that type of stuff that is better explained in a long format than here. Solana down, I don't know why my voice broke there, I must be hitting puberty soon. Solana's down a little bit, but again, this is on the back of a crazy performance. The levels that I like on Solana is still the old range high at around 43, 47. I really think that's a decent line in the sand for bulls. Anything below there just starts to look a bit shit. Really shouldn't be losing that if these last 2 weeks are genuine breakouts. And the continuation level is at 78, and the final do or die sort of pivot, if you will, is around 26 to 29-ish. I'm not exactly sure whether to look at this breakdown structure or the more local range breakout. As a general rule of thumb, if you're looking at a strong trending market, it should be finding support, if it is strong, in fact, at the earlier levels. So it's something like this. At the moment, it's in the middle of nowhere. This is one of those we'd have to look on the daily time frame and get your weekly opens out, daily opens out, lower time frame range type of stuff. But in terms of the larger inflection points, I think that 44, 47 is a really big one. And then should it get there, closer to 80 as well. Here, these are the interesting areas. Here it's a bit flat, to be honest, and we can see that in the price performance as well. I think the chain is down today. Is that it? I may have read something on Twitter. Not entirely sure, but the weekly picture remains unchanged. Even the daily time frame, to be honest, isn't super helpful with this type of structure, so I would very much defer to the weekly. And I think the same weekly argument applies to XRP, where there is a large inflection point around 58, 59 cents. I don't really know what kind of narrative catalyst meme insider trading thing it would take to make this thing interesting. I don't want to get too technical with it either. I would ordinarily argue that we've had one fake out at this level, and so now that we're above it again, that should be bullish. But because so much of this was sort of SEC really aggressive price action related shenanigans, and there was also the fake ETF filing, I think, on this candle, it's just kind of, it's all over the place and rife with manipulation quite clearly, which can be quite fun for trading purposes, but in terms of finding very clear patterns in market structure and that kind of stuff, makes it slightly less reliable. But nonetheless, 58 cents, decent inflection point on XRP. Again, I wish I could provide a stronger directional bias for a lot of these levels, a lot of these altcoins, but the answer is I simply don't have one, to be perfectly transparent. On the BTC front, I'd like to see the monthly close. The weekly looks strong, and the daily also looks strong. But now we have some weird headline risk that the market's, trying to digest and not entirely sure which, how that's going to resolve. And so with that in mind, on the BTC front, it's making it pretty hard to be one-sided on altcoins. I'd rather be a bit more fluid with it. And similarly for ETH, I think the short-term trading around 2.1 to 1900 has been reasonable. At least the levels are well-defined. But in terms of larger directional bias, quite similar to BTC, the weekly breakout signal is good, but the fact that it's being capped at 2.1 sucks, and it also just doesn't help to have really strong altcoin views when ETH BTC overall is still downtrending and weak. Now, obviously, this thing has been uniquely weak. In the past, you've been able to use ETH BTC as a proxy or barometer for altcoin strength as a whole, whereas more recently, it's just been the weakest out of all the altcoins. But in general, I still think if we want to see sustained retail-friendly risk on, it would help if ETH is in there as well. So given BTC monthly close, monthly resistance, and currently sort of digesting some Binance news, ETH BTC weak below 0.57, and ETH USD good breakout but weak reaction, and the whole spot ETF reaction being underwhelming, it's pretty hard to have strong altcoin views. So I'd rather just look at what the big levels are in those, some of which I've tried to share, and then if a short-term punt comes up, punt it. If it doesn't, just wait, chill, no rush type of vibes. If you ever feel rushed in the market, it's either, which is less frequent, because you've identified a short-term edge or setup that you need to execute on now because it'll disappear otherwise. In that case, urgency is good. But most of the time, the urgency that you feel is completely illusory and a product of your imagination. And it's not urgency, it's in fact FOMO. So if you ever feel rushed or like, oh my God, I have to do X, Y, Z, just taking an extra, sometimes even 10, 20, 50 seconds and assessing what you're doing, whether it makes sense, what your system is saying, what information is available to you, and, lowering that heart rate essentially can be quite useful. I mean, Twitter is by definition a FOMO generating machine. Look at my profit screenshot, look at the trade I took, look at my paid group thing. I've had the best XYZ quarter, year, whatever, ever. I think we're coiling up for a massive move. Everything on there is designed to make you act. So as long as you act autonomously and not on the whim of social media or certain moves or candle colors, I think you'll do great. I'm going to shut up. Enough fake philosophy. Hope you all have a wonderful week. Thank you to Woo for supporting the show. I think there's a post-mortem coming. If in doubt, withdraw. Always, any exchange, partner or not. And yeah, we'll see you later in the week for more stuff, I guess. Bye-bye.